HT Smartcast.
You are listening to a Mint production brought to you by HT Smartcast.
Hi, welcome to Why Not Mint Money. I'm Satya Sontanam from Mint's personal finance team. In this episode, let's listen to what Nikhil Kamath, the co-founder of Zerodha, Beacon and Gruhas, has to say about his personal finances. Despite the correction in the Indian stock markets lately, Nikhil is not comfortable investing in equities even now. He still thinks that markets are expensive. He believes gold will further go up and very bearish on real estate. At Mint, every year this time, we try to reach out to a few of the leaders in the financial services space to understand how they manage their personal finances, what changes they have made to their portfolios in the last 1 year, and their views on various asset classes. For this episode, let's invite Nikhil Kamath.
Welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started with your money journey.
I want to start by reading out what you said to us last year, Nikhil. So quote unquote, you said, I feel like markets are expensive, hence I have a larger allocation towards risk-free assets. Whenever there is a correction or something changes significantly, I would rebalance to have more equity in the portfolio. And you also said you increased your allocation to gold from 2% to 15% last year. So, and bang on, 1 year from then, markets corrected. Gold has been the best performing in terms of INR. So, you want to say anything about that?
No, it feels like gold has further legs to kind of go up. And I continue to remain underweight on equity. I think my equity allocation is about 40% now.
Sure. You still think valuations are expensive in your market valuations?
I think so, yeah.
Okay. Do you want to say why?
Lots of headwinds, I would say, starting from inflation. The biggest of them all being the interest rate cycle, where the cost of money is significantly higher than it used to be. But for many reasons, and not just that alone, I feel there is a housing crisis which is on the anvil, which might happen sometime soon. I feel like real estate is really overstretched as an asset class. So for a lot of reasons, I feel markets are expensive. But I would say at the current juncture, to put to light that interest rates are significantly higher is probably prudent.
Understand. So, can we also talk about, what changes you made to your portfolio in the last 1 year? Because we talked in April 2022 and now it's April 23. So, what changes?
So, I made 40% equity, 15% gold remains.
Sure.
In fact, I added a little bit of gold over the last month. About 40% is fixed income, which is pretty much risk-free debt. And
Sure.
5% is alternatives.
Equity we talked about. Could you also mention what proportion of your equity portfolio is to international and your views on, because last time I remember you saying that you are very bullish on China.
Not much at all. Internationally, you're capped by this LRS limit, right? You earn by more than that limit. So it would be like a nominal percentage. Mostly it's Indian equity.
Okay, cool. Any view? Or because last time, that's what I mean, you were bullish on China. Any view on that?
I think international markets are overpriced as well. I think the US is overpriced. There's plenty of disruption happening. So I would not add allocation at this point.
Sure. And coming to fixed income debt part, Nikhil, last time you said it's GSEC and tax-free instruments.
Same. Even now it's the same.
Okay. Just want to understand, have you ever thought of investing in target maturity funds, debt funds? Any view on that?
I mean, even if
Why
I
not them?
thought I should have, now that tax arbitrage there has also gone away, right? So if it did not make a lot of sense earlier, now it definitely does not make sense.
Understand. Yeah. And the taxation arbitrage on MLDs was also removed only recently. Any thoughts on MLDs, and have you ever considered or have you ever thought of investing in MLDs, because that's the very tax efficient instrument?
They no longer are, no?
They no longer are, but yeah, in the past year, in the last 1 year, have you ever thought of that?
No, I haven't. So everything from MLDs and debt funds, all of them, I think the use case for them has become irrelevant now. So I'm not even looking at it.
Understand. No, just wondering, why haven't you thought of, because these are the instruments that are very popular in the HNI segment, right? So just wondering why.
They used to be, but I prefer holding the paper to the G6, and I don't like having a fund manager in between. And for many reasons, I kind of did not, but now though it makes no sense whatsoever.
Got it. For the benefit of listeners, MLDs, market-linked debentures, are hybrid or the structured products that invest in both fixed income and derivative instruments to generate higher returns compared to plain vanilla debt fixed income products. There was a concessional tax treatment for gains made on market-linked debentures earlier. Those in the high net worth segment found these instruments very, very attractive due to these tax benefits. Now, those tax benefits are no longer available. Income from fixed deposits, debt mutual funds, and MLDs are more or less treated the same and are taxed as income from other sources at slab rates. And you own the real estate and any exposure to that, Nikhil?
No, barely. Like my parents own a home, but that's pretty much it. But I'm a big bear on real estate, have been for a long time, and I think especially in India, where the yield on real estate is only about 3% on residential and under 3%. With inflation being where it is and interest rates being where they are, I don't think it makes any sense whatsoever.
Understand. Sure. And lastly, about the unlisted equity, the private equity and the alternate investments that you hold.
We have a couple of funds through which we do this. And each fund has a thesis of its own. We have something called Gruhas, which is a vehicle which does a lot of consumer-focused businesses and prop-tech businesses. But so each one has a different thesis. So there are a combination of different theses which make up the alternatives.
Understand. But anything more on that? And what do you look at? What segment or what sector, or the key metrics that you look at when investing in the unlisted space? Have you exited anything? Any of the investments in the unlisted space?
This has been going on for a long time, so there have been exits and stuff. But pretty much, I think the use case of the business, the sector they're in,
sure,
the quality of the management, stuff like that.
Okay. Sure. I'm also wondering, is there any family office structure to this, Nikhil? Last time when we spoke to Nitin, also he said that you are handling the whole portfolio, and I'm just wondering, is there any family office structure to this?
Mm-hmm. Nothing is such.
Have you ever thought of? Yeah.
I think family offices are for inactive investors. Here, when our job is only to do what a family office does, I don't think we need that distinction.
Understand. Got it. And in the equity part, your allocation to maybe large, mid, and small cap, and has there been any changes to that?
No, I continue to buy mid cap and large cap and stay away from small cap.
Sure. Could you also share how your portfolio has performed in the last year?
It's reasonable. It has done whatever Nifty has done, plus 1 or 2% alpha.
Okay, the overall portfolio level performance.
Correct.
This investing in art is also one of the increasingly popular segments. So have you ever considered that?
Yeah, no, I think investing in Indian independent art is a great opportunity because it's a very under-penetrated market.
Yeah.
Buying foreign art, being an Indian citizen, is a bit hard because of customs duty and stuff like that. But I think there are plenty of opportunities in Indian independent artists.
So have you considered that? Have you considered investing in them for your personal portfolio?
Not too much. Maybe like a little bit here and there, but nothing significant.
Okay. And also on an overall portfolio level, Nikhil, is there any strategy to hedge your portfolio?
This is a hedge, no? By having 60% exposure to fixed income, gold, alternatives is a hedge against equity.
Okay. No, just wondering because there are these market neutral strategies as well, long short. So just wondering your exposure to them.
So we run a long short fund ourselves, right?
Yeah.
So through that there is some exposure, but most exposure on the hedging side is things like gold and fixed income, which do well when the markets don't.
Understand. Talking about that, could you also mention what is the skin in the game kind of an allocation to your own portfolio or to your own fund?
I would say between 5 to 10% of the fund, typically.
Sure. And what do you think most of the time, Nikhil? Is it wealth preservation or growing wealth?
It depends on the underlying cycle. In today's times, I think wealth preservation is probably more important.
Sure. Yeah, you already said that you review your asset allocation every month last time. Of course, you're very active on your portfolio side. So we can say that you review your portfolio every monthly.
Yeah, you can say that.
Sure. And any changes on the emergency fund? Last time when we spoke, it's again, 5 years of emergency fund. So on that part?
This is an arbitrary number. To be fair, if I were to be practical, it probably is more than 5 years. But I think 5 years is a good benchmark that anybody should have.
Sure. What does wealth mean to you? Last time you said it's freedom. Yeah, I think it's the same thing now.
Yeah, it's pretty much the same. I think it's the freedom and it gives you the opportunity to do stuff that you might not have done without wealth.
I understand. And, we talked a lot about wealth, but, nobody can deny that health is a big wealth. And what do you do in terms of your health, maybe in a line or two, every day?
I try and go to the gym. I try and eat healthy, try to get enough sleep. But I'm not a fanatic about health, I think those 2-3 things I do, but nothing I'm a crazy health freak kind of a thing.
Sure. And there's no need of insurance at this level, right, Nikhil? So the life insurance, all the health insurance.
I'm not a fan of insurance. I typically never buy insurance. For some people, it makes sense.
Yeah.
Life insurance, I'm not sure, but medical insurance and stuff does make sense. But I don't have any large investment in insurance.
Understand. And as I said, when we were talking to Nitin last time, he said that you are managing the portfolio. So how often do you discuss or talk about investments, the change in investments? How often does it happen?
Between us?
Yeah.
And there's no discussion. It's not that kind of a thing.
Sure. Okay. Sure.
Yeah, so I think he does not get involved on anything market related. And, we don't really discuss it or anything.
I understand. Yeah. And last, do you want to also talk about the philanthropy that you and Mr. Nitin are involved in?
Yeah, no, we're doing more every year. The ratio, the percentage is going up. And beyond a certain point, I think neither of our lifestyles has changed drastically or anything. So I think it will continue to go up.
Understand. What drives you and what are you focusing on in that particular segment?
There are a bunch of different vehicles again. There is one around climate called Rain Matter. There is one around education. There's one called YIPP, which does, again, in education is doing something right now. So different vehicles, different things.
Sure. And also, Nikhil, there is this popularity for the investment-based residency programs for US, Portugal, etc. So have you ever thought about that? I think that's again a lifestyle kind of a thing more than an investment.
Not particularly. Somehow the big opportunity seems to be India. I feel like people should be inward looking and not outward looking right now, because we are growing faster than them and our markets have significantly bigger opportunities than the West.
Sure. So you haven't considered that?
No, not at all.
So, yeah, and the last few questions. Were you able to go on a holiday in the past year? This is one question we ask every year.
Yeah, I did.
Cool.
I went recently to Maldives.
Okay, cool. Yeah, and any lifestyle changes during the past year that will become permanent?
Trying to sleep more. I haven't achieved it yet, but want to sleep like 7 hours a day.
Awesome. Sure. And last question, Nikhil, it could be a little heavier, but what legacy do you want to leave behind, and what do you want to be known as?
I think people who think of legacy, it's a little bit juvenile. I think we're all very transient. Our time on this planet is very transient. We think we are more important than we are, but in a sense, we are born and we die, and whoever you are, I don't think it matters what happens beyond your lifetime.
Sure. Yeah, that's all from my side, Nikhil. Thank you so much for your time. That's all for now in this episode, listeners. If you have any queries or suggestions, you can reach out to me on Twitter. My handle is @Satya Sontanam, SatyaSontanam. Or you can also write to us at mintmoney@livemint.com. Bye-bye.
This was a Mint production brought to you by HT Smartcast.
HT Smartcast.